Hello everybody again, this is Matador from freetradingvideos.com. It's still Friday, February 6th, 2009 at about 2:33. I wanted to show you a neat little thing that happened after I burned my noon video. I saw this resistance here in the broad markets around the 86.17 to 86.50 mark. We were watching that closely. Nice little double top, triple top, resistance, resistance, resistance over and over again. Watch this happen. Nice breakout out of this high base slash ascending triangle, and again being a little bit more careful, but once it broke out, took off nicely to the next logical place of resistance, like we were talking about, just shy of that 87.50 mark. In fact, I think the high was about, what's the high of that? Give me 1 second. 87.27. Yep. So about 20 cents shy of the exact resistance again, but at least we're past the 200 MA on the 60-minute chart, which is nice, and it's finally being confirmed by the trend, which dropped off after we talked about that. So we were looking at the trend VIX, rising, and then it kind of bled out again, which gave us a chance to go higher. At the same time, the trend did also go down. So good confirmation. It's now basing up there again, and the reason I'm going through this is to see that we're running back up into this resistance. It's holding up nicely. Good 50% retracement of that last sell-off, and or run-up, and that's good news. So somebody had wanted for me to do a video about Caterpillar and Thinkorswim, so I'm just going to give my 2 cents on Caterpillar. So here's a daily chart. This is again Thinkorswim. Good stuff. So I'm just using a profit chart, and maybe scrunched up. You can zoom in, just left-click and hold. Drag over, and you can actually zoom in as much as you would want to, and then you can grab the slider and go back and forth days like this. But a long time ago I had talked about support, this double bottom support again and again. It finally broke that. A little bit of a head fake here, some good money to be made intraday on this on the short side, but that was the first sell-off to support, a little bit more dangerous. Now we're running back up. It's a little bit subtle but dramatic at the same time. You can see this unfilled gap, and if I go to a say 30-day 60-minute chart, to an hourly chart, you'll be able to see that as soon as it updates. There he is. Grab a little horizontal line, drop them in there, and that's what we're fighting right now. Also happens to be the round number of 34, so that's where I would drop that. So broken on earnings, comes back after resistance, and that's the first now run up back into resistance, and also the declining 100 MA. So you've got the 200, the 100, the 50, perfect doublings of each other. Then you have the 20 and the 13. Some people will use a 9 EMA, whatever, but that's a shorter term moving average, shorter time frame. This here, though, is fairly significant on a 60-minute, so an hourly chart, and that's the 100 MA. So be very careful again how you go along in here, especially after the nice run-up in the markets. So here is a 5-day 5-minute chart, or we could even do a 5-day 15-minute chart. So again, nice run-up this morning. Good news, here's the line I just drew in. It's stalling there perfectly at this gap fill. Again, you would see that if I put in 20 days or whatnot. Then you can zoom in. See that? So this is exactly what we're fighting. Boom, boom, boom. And now we also have the 200 MA on the 30-minute chart. So a lot of overhead resistance right now. A breakout of this round number of 34, though, might get us a move up into the 35.50 area. Again, sometimes they get cut shy, like we just saw in the S&P, and sometimes they'll go through it. But no matter what, I would need a pattern to trade long here before I jumped in. And this is all just technical. I haven't gone into any of the fundamental analysis or how powerful or weak the company is. Relatively, it looks weak to the broad markets. One nice thing you can do in Thinkorswim is go to a comparison chart. Just right-click anywhere in the chart, click on Chart Settings, go to Comparison Chart. A little box pops open. You can compare this easily to, say, whatever, the S&P 500. So drop it in there, and you've got all these moving averages in here. It kind of messes it up, but you can now see that the S&P 500 is the blue, and you can see that from up here. See that comparison SPX. The black line is relative weakness stock. See that? That is pretty weak compared to the broad markets. Right? If you wanted to change symbols, then look at something like an apple. you would probably see the opposite. Nope, still not too much better, but 10% better. So I guess that's significant. Again, it's all scrunched up, hard to look at with these moving averages on here. But relative strength stock, at least during this time frame. And they move almost lockstep, except now they're diverging a little bit. Anyway, kind of cool to see that. And to get rid of it, just go back to chart settings, comparison chart, get a pop-up window, click on this, hit delete, and you've got your chart back. Cool. Double click. You can go back to daily chart, 3 months, whatever you like, and you're back in business after some good analysis. So pretty neat to be watching this area on Apple as well. All these things are hitting resistance. Here's the century mark in Apple with Caterpillar. We're watching this same resistance. So just wanted to throw that out to the camp. Hope you guys, again, have a great weekend, and I'll talk to you soon.